All right, guys, how is everyone doing? Let me know really quick if you can see me, if you can hear me, and most importantly, if you can see my screen. So what you should be seeing is the layout here of the slides and then these charts that are behind the slides that I'm going to be flipping back to. All right, fantastic. Um, I'm Paul Singh, as many of you know here, and I see a lot of regulars, and I think I see some first timers here. Awesome. We got a huge turnout today. Uh, Let me know if you're new to Bulls on Wall Street, if you're new to me within Bulls on Wall Street, uh, and if you have any experience trading, swing trading, and also where you're from. And we've got a huge turnout here. Kevin, I recognize, Jeff, Raj, Ryan, Jasmine, Christopher, Brian, Stuart, Oliver. Looks like some new faces here. Kuba, if I'm saying that right. Michael, I recognize you. Got a lot of emails from you. Antonio, how's it going, Antonio? Tony, Randall, wow, huge list here. A lot of new traders. We've got Reno, Germany, Detroit, Christopher, awesome. Or Christoph, sorry, from Germany. What time is it over there, by the way? Indiana, by the way, I'm going to be in Indiana in a couple of weeks here. One of my best buddies is over there. Columbus, Ohio. Pittsburgh, all right, I think Pittsburgh's playing tonight. London, my wife was born in London. New Mexico, St. Louis. Wow, a lot of traders here. Seal Beach, very familiar with Seal Beach. Out here in California, Michigan, Winnipeg, Irvine, not too far from me. Wisconsin, all right, fantastic. Canton, Ohio, awesome. Okay, guys. So first of all, you might see Kanal's name there. This isn't Kanal, obviously. It's Paul. Just logged in under his name here. We're going to talk swing trading today, and we're going to talk about trading into the end of the year. There are some trends that we look for going into the end of the year and some specific things that help us trade in this year-end push here. So we're going to talk about that. That's going to be our focus today. I should be able to get through it pretty quick. I like to get to the point, so if I should be able to get to what we need to get to 30 or 40 minutes, hopefully. Sometimes I run a little longer. And then we're going to have an open question and answer, anything you guys want to talk about. So have your questions ready. We're going to hit almost every question you ask. And if I can't get to all the questions, I usually do a follow-up video on the questions I didn't get to. So I'm going to get to everyone, even if I didn't get to you today. So it's going to be a lot of fun. Let's wait a few minutes for everyone to get in. It's still early here, 5 o'clock on the West Coast here, 8 o'clock for you guys on the East Coast. What I always do when I start a webinar or do a class is I always go over a book that I'm reading. And the reason I like to do that, one, I read a book a week. So I like to share with you guys what I'm reading. And it's always something picked out that I think that will help me in some way. And usually it's trading related. Now, when I say trading related, it's not a trading book. So I rarely ever read trading books. And when I get trading book recommendations, most of you know, I always say most trading books are garbage. There are a few good ones, but Trading in the Zone, one of my favorites. Most of them relate to the mental game, but not actual trading. One of my favorite books, it's already one of my favorite books, and I'm still about halfway through it because he's one of my favorites, is Ray Dalio's Principles here. Fantastic book. He's one of the greatest hedge fund managers of all time. I'm going to read a couple of quotes to you because they really relate well to what we do as traders. So you can apply these to what we're doing. And I'm getting a lot of questions about whether this will be recorded. I am recording it, so I'm assuming it will be released. Sometimes we don't release them so everyone shows up, but I think this one's going to be released here. So don't worry about it, guys. You'll be able to watch it later as well. Few of the quotes I really liked in this book. Number one, listening to uninformed people is worse than having no answers at all. That's really true in trading. And many of you know, or you've heard me say this a lot of times, is I do not listen to CNBC. I don't read the Wall Street Journal. I might scan it for headlines if I really need to know something. The only time I turn it on in CNBC is when there's a Fed meeting a few times a year, because there is so much misinformation. So as traders, we have to block out all that noise and do our own analysis based on these setups and this analysis that we have. So that's number one. I really love that quote. Number two, I believe that the key to success lies in knowing how to both strive for a lot and fail well. And the key is fail well. Many of you guys know one of my other favorite books is The Obstacle is the Way, and I'm a big fan of Stoicism. In trading, you are going to fail a lot. You're never going to be perfect. You have to deal with taking losses. So, for example, if you've got a 55 to 60% win rate, depending on your risk reward, you're doing fantastic. But what that means is you have a lot of losing trades, and the good traders know how to deal with that. So really good quote there, and he makes a point of that a lot in his book about all the failed trades. I mean, this is one of the greatest traders of all times, and he's had years where he was in the negative, and he came through it. So you're going to have to learn to deal with that as a trader. And then finally, in trading, you have to be defensive and aggressive at the same time. If you're not aggressive, you're not going to make money. But if you're not defensive, you're not going to keep your money. And that's all related to risk reward. And it's an interesting kind of conundrum as a trader that you have to be really defensive and you have to manage your risk. We always talk about not taking these big trades, not taking big losses. But at the same time, it's kind of a weird dynamic that you have to be aggressive as well. And when that trade is there, boom, you have to take it. For example, yesterday I got stopped. This kind of relates to two things we're talking about here. One, I was in an LABU trade, which is the biotech ETF. I got stopped out of it early in the morning. So there I was dealing with a loss. And then just a few hours later, it put in a buy signal. And it was kind of tough to enter. You know, in my mind, I'm thinking, I just got stopped out of this trade. Do I really want to get into it? And I did get into it. It popped today. So I was aggressive, but defensive at the same time, and handled that failed trade. So you can see how all of these things apply to these quotes there. So it's a really good book. It's a really big book. He calls it his life's work. So check that out. All right, we've got a huge turnout now. A lot of you guys in here. Let's get to what we're going to talk about today. All right, so we're going to talk about actionable swing trends going into the end of the year. Now, as swing traders, we're looking for patterns, and a lot of the same things play out over and over again. So we have an idea of what to look for going into the end of the year. So, you know, once Thanksgiving hits and we get into that last month of trading, there are these specific things I look for every single year, and we're going to talk about that today and potentially trade them going into the end of the year. So we're going to talk about that specifically. You can see the agenda for today. We're going to do an overall market analysis. So before we even talk about stocks, and that's a mistake a lot of swing traders make, before we talk about stocks, we need to have a general understanding of the market and then what sectors are hot, and then we can hit the stocks. So we're going to do an overall market analysis. Then we're going to hit the hot sectors going into the end of the year. After that, we're going to get into more of the fun stuff. We're going to get into a watch list. I have 33 stocks picked out that are going to be on kind of a ready-made focus list for you. So you really don't even need to do any more analysis, really. You're going to have these 33 stocks to watch for the next month. And then it's going to be a matter of getting the right signals to trade them. But you're going to have a list of really good momentum stocks to potentially trade. So we're going to get into that. We're going to get into the FANG stocks. And those of you who don't know, that's Facebook, Amazon, Netflix, and Google. We're going to take a look at those and talk about specific triggers, again, to potentially trade them going into the end of the year. We'll get into a few post-earnings breakouts and breakdowns. Now, those of you who have been through the Bulls on Wall Street Bootcamp, I teach those setups. We don't have time to actually go through and teach those setups specifically, but we'll talk about it a little bit, what to look for. Since we're coming out of earnings season, we've seen a lot of stocks gap up and down based on earnings. Then we're going to get into December seasonality, which is really important to know. It stacks the odds in your favor. Now, every year is not exactly the same, but you have the odds on your side if you play that seasonality. And then finally, we're going to have a question and answer. All right. And then stick around for then, question and answer, and then we're going to have a special surprise, basically with the swing service that I run, where I give my trade alerts and my daily reports. We're going to have a huge discount, so that I think I've given away the surprise, but that's what it's going to be related to. All right. So, and while I give the introduction here, how many of you guys have been or are members of the Swing Report? Okay, so a little about me. I'm Paul Singh. I have been swing trading well over a decade. Actually, I'm getting close to 2 decades now. I started trading in the late 90s during the internet boom. And I run the swing trade service for Bulls on Wall Street. So Bulls on Wall Street's founder and CEO, Kunal, who is really mostly focused on day trading, and now he's really getting into cryptos. He's a good swing trader as well. But I mentored him in swing trading back in the mid-2000s. And then he adjusted the strategies. A lot of them apply to day trading. Then when he wanted to start the swing service, I took over that after I had started trading full time. And if you want to know a little more about me, I'm not going to waste a lot of our time here, but you can go to this Chat with Traders interview. The link is up here, but you can just Google Chat with Traders interview and Paul Singh, and you'll see the interview here. I get into a lot of my background, a lot of good trading strategies, especially for you guys who trade part-time with full-time jobs, which what I used to do. That's how I built up my account. And those of you who would like to someday transition into full-time trading, I talked a lot about that. And also, I just did another interview with Desire to Trade, and we talked a lot about the same stuff, but I got really into the part-time and full-time trading. So I think those are worthwhile if you want to know a little more about me and also the kind of the journey in becoming a successful trader. So you can check those out. Just Google Desire to Trade and Paul Singh. And by the way, Kunal has been interviewed by both of these as well, so you can check out his interviews, which are fantastic. All right, let's get into it. Enough of the introduction. Let's get to the meat of this and figure out what we're going to trade going into the end of the year. Okay, so we went over what we're going to go over today. Let's start with the market analysis, and then we'll get to really the fun stuff. But before we get to the fun stuff, we have to know what's going on with the underlying market. So the main indexes I watch to figure that out for the type of swing trading I do is I'm looking at SPY, which is the ETF for the S&P. I look at the IWM, the Qs, which is the NASDAQ. I look at gold. I put down UVXY, but that's actually the triple leverage because that's what I trade. I trade UVXY a lot, but you could use a different ETF for that might give you a slower signal, but that's fine. We can use UVXY. And then USO, which is oil. And FXI right now, I put that on there too because China has been really hot, and I've been watching China every day. So these are the main indexes that I've been watching. And we're going to pull these up here. So hopefully you guys can see my charts now. So what you were just looking at is this setup right here. And before we look at them specifically, let's talk about the relationships that we want to be looking for going into the end of the year, and what is going to signal a strong market. And you guys, you have a lot of questions here. If it's related to what I'm talking about, after I talk about it a little bit, I'll ask are there any questions? And then if it's something not related to this, we'll hit it at the end. Otherwise, I'm just going back and forth here, and it's tough for me to answer everything. So now what we're looking for with these indexes initially is the relationship between a few of these, specifically SPY, IWM, gold, and even the Qs. So what SPY is, it is the 500 biggest stocks. So the S&P 500. Now, when I say the market, when a lot of people talk about the market, that's what we're talking about. We're talking about SPY. But it's not necessarily a good indication of the overall market because it's the 500 biggest stocks. And not only that, it's more weighted in specific stocks. So the Apples, the Microsofts, the Googles, the Amazons, those are more heavily weighted. So those are going to influence. So if those guys are doing good, but a bunch of other stocks aren't, SPY is going to still look like it's doing good. So that doesn't really tell you, is this a really good market? So that's one of the things we're looking at. How is SPY doing? But like I said, we need to know a little more. So then we're going to look at IWM. Now, what IWM measures is the best 2,000 stocks. So now it's not just 500, it's a broader representation of the market. So it's not just the big guys, it's more of the middle caps as well. So more of the momentum type stocks that we might be looking to trade, because a lot of times it's the smaller stocks that are the ones that can really move. And when I say smaller, I don't mean price, I mean their float size and their market cap. So it's 2,000 stocks. And also, while IWM still has the Apples, the Microsofts, the Googles, and all those guys in it, they're not as heavily weighted because, first of all, it's spread out to 2,000 stocks. So they're not going to have as much of an impact. And what we want to see for a strong market, we're going to watch SPY, but to know that we want to get really aggressive in this market and we want to really trade this market, we're going to look at IWM and look to see if it is keeping pace with SPY or even beating SPY. So you can see right here, recently, IWM has made a big pullback while SPY hasn't. SPY has been doing really well. IWM wasn't. And that was a signal that this wasn't the best market to trade. So we traded more conservatively, and that's paid off because we've been more selective in our trades and taking less trades, which has helped with the win rate. Otherwise, if we were just taking a bunch of trades right now, we'd probably be losing quite a bit. Now look at the difference between what's happened now compared to what happened from August to September. Both indexes were fantastic, but IWM was on fire. That was a really hot market to trade, and we could see right away why, because IWM was taking the lead. So that's one of the things you want to pay attention to going into December. And we got a good signal today. So just look at today. We got a big bounce today after the market was pulling back. SPY was up 0.85%. IWM was up 1.47%, or 1.5%. That is a good starting point here. Now we want to see this continue. If, going into the Thanksgiving holiday and after once December starts, if we see that continue, we're going to say, okay, we can get really aggressive going into the end of the year. So that's one of the things I want you guys to pay attention to. How strong is IWM? Now, the second thing we're going to look at is not only the relationship between SPY and IWM, we want to see how gold is doing. Now, a lot of you guys probably hear the saying all the time, gold is a flight to safety, and that's true. If the big guys, the hedge funds, the big money players, if they're concerned about the market, they're going to pull their money out of the market, and they need to put it somewhere. They're not just going to put it in the bank. So they're going to put it in gold. That's the flight to safety. So what we want to see is when there is a pullback, what's happening with gold. If gold is not really popping, we can say, you know what, this is a pullback. The market always pulls back, but it's just a garden variety pullback. It's okay. Now, if gold starts to spike, then we get concerned. Then we say to ourselves, this might not be a garden variety pullback. There might be some things we need to worry about. I'm not going to trade quite as aggressively during this period. So pay attention to that. And let me actually get off this. Now, we're not going to be talking about the relationships as much, so I'm just going to go to the single chart here, and we're going to switch over to UVXY now. Now, UVXY is a VIX ETF. And for those of you who aren't familiar with VIX, VIX is basically a volatility or fear index. So VIX is going to pop when people are scared, essentially when the market is pulling back. So we want to see, sometimes even before the market starts pulling back hard, VIX will start to pop. And when the market actually does pull back, we get some really big spikes in VIX. And they're actually good spikes to trade. Those of you who are, I know a lot of you here are probably day traders as well. VIX is a fantastic trading vehicle when there's fear in the market. So pay attention to VIX. If you start to see VIX spike, that's another indication that maybe I better play it more conservatively, even going into the end of the year. Maybe you can even think about shorting. So pay attention to this VIX indicator. I know there's a lot of talk about VIX, but keep it simple. Just watch for the spikes. And that's going to help guide you in how you're trading. So we want to pay attention to VIX. We want to pay attention to gold, IWM, SPY. And then finally, we're going to watch oil. Now, oil doesn't, I'm not worried about the relationship between oil and these other things. I just like to trade oil. So I'm always watching oil. And if oil starts to break out, we often see these big runs. And since oil has already made a big move from summer till now, there's potential for a year-end markup. And we're going to talk about December year-end markups in a second here. But keep an eye out on oil. Basically, if oil breaks this range here, basically a high, so you can see it had an old high right in here, and we had this huge run right up to that high. If it can break this high, it could really run going into the end of the year. So pay attention to oil. And then I threw in China here as well, because China has been leading the market, has been on fire. And if we get a high break here, that might be something you want to pay attention to. So that is the market analysis. Keep an eye out on these things. If you start to see IWM take the lead, we're going to want to get even more aggressive going into December. One last thing I forgot to mention here, the Qs, the NASDAQ. That's going to give us a good indication of how strong big tech is. So basically the FANGs, the Amazons, the Googles, the Facebooks, the Netflix, the Apples. If the Qs are strong, those things are going to be strong, and we can trade those aggressively. And right now, they're back to leading the market, and that's what we want to see. So there's a lot of good signals after a pretty shaky last 2 or 3 weeks. So things are looking better going into the end of the year, which is exactly what we want to see. So that kind of sets up our thought process now going into the end of the year. We know what to look for. We know what these relationships are in the market. And if you understand these things, you already know more than a lot of swing traders, because a lot of traders are not paying attention to these things. They're just looking for stocks to trade, and that's not the starting point. You need to start with the market analysis. Okay, now we're going to get to more of the fun stuff, and that's actually getting into hot sectors and then the stocks to trade out of those sectors. So after I've done, and by the way, guys, you can ask your questions now. If you have questions about anything I just discussed, go ahead and ask them now as I get into the sectors here, or before I get into the sectors here. Okay, we've got some questions related to some other things. You can ask those at the end. All right, so now let's get into the sectors. So there are basically 9 areas that I'm watching very closely. I could actually make this 20 different areas, but there's 9 that I'm watching really closely, areas that look hot going into the end of the year. Number 1 is big tech, we just talked about, which is basically the FANG stocks, Microsoft, Apple, and a few others. So that's number 1. Number 2, and this is related to big tech, generally when big tech is moving, semiconductors are also moving. So we've got Apple, we've got Facebook, Amazon, Netflix, Google, and then we've got semiconductors. Now there are a ton of semiconductor stocks. My favorite right now are NVIDIA, so NVDA, AAOI, which is actually beaten down, OLED, OLED, and AMD. And we're going to go through each of these stocks in a second here, and I'll just quickly show you the patterns. We can't get too deep in the setup triggers. Now we talk about these stocks every day in the report, and when I actually make a trade or there is a trigger, you get alerted on those. Number 3, China, and specifically China stocks related to internet content. Those are basically the China stocks I'm watching. So China, as we looked at FXI, is on fire. And specifically, the stocks we're looking at are all internet related. That's BABA, which is basically like you could think of it as Amazon. Not exactly, but kind of like Amazon. Baidu, you could kind of think of as Google. YY, SINA, NTES, WB, and WUBA, all related to social media or internet content. So really hot right now. We'll get into those stocks. Financials. Financials have been picking up a lot. Probably related to interest rates. And interestingly enough, a lot of people think when interest rates go down, that's good for financials. Financials actually usually go up when interest rates go up, and that's the thought process over the next year or so. So financials have been doing well. So now there are a ton of financial stocks. Very few of them are going to beat the triple leveraged ETF. So the only financial I'm really watching to trade is FAS. And we'll take a look at that in a second here. Energy and oil, so I showed you USO. The trading vehicle for that is the triple leveraged ETF that we use, UWT. And I'm also watching DO, which is a stock I really like, and then and it had a really nice earnings breakout as well. And then the energy ETF, which is ERX. So those are the three trading vehicles we're going to look at for energy and oil. Finally, solar is probably the leading area right now, and two of my favorites are FSLR and SEDG. Housing and construction, and we've got four stocks there. Surprisingly, a beaten down sector that is waking up is retail. These are all ugly looking charts, but we're starting to see them wake up. So we've got four of those there: Under Armour, Macy's, JCP, and KSS. You're going to probably say to yourself, those are really crappy stocks. Why are they on your list? It's because we're starting to see things, indications that they might be bottoming. And then finally, casino and resorts. And the only one I put up here is Wynn. It's my favorite to trade in this area, but there are really a ton of them that I could have thrown on this list. Okay, so these are the areas we're going to be looking at to trade going into the end of the year. If the market makes a run, these are probably going to be the leading areas and stocks to be trading in that period. So now you've got 33 stocks. Put them in a watch list, whatever you use. If you use TC2000, create a personal watch list or whatever your charting platform is. Make a year-end watch list, get these stocks in the list, and if the market starts to ramp, you'll definitely be trading one of these stocks. And let's actually start to get to some of these and take a look at what we're seeing here. Let's start with, why don't we start with Apple? I usually don't trade Apple because it doesn't move like it used to unless I'm trading options. Now, if I was looking at Apple here, it's made a fantastic run, had a deep pullback, has broken out post-earnings, and now has pulled back. So if I was looking for an entry trigger in Apple, and this entry trigger is actually going to be the same in a lot of these stocks, you're going to see a lot of us talking about the same thing. Off this pullback, there's two ways to play this. I'm either going to play a remount of this 9 moving average. When they break down below the moving average and then break out above, that's often a really good signal. And a bunch of the stocks we're watching are doing this right now. So that's one of the triggers. Now, if you don't feel comfortable with that, you want to see a little more strength, wait for the high break. So one of these two things is going to be our entry trigger for Apple. Facebook, almost exactly the same thing. We actually got the entry trigger today. Let me pull in a little closer. So as you can see, first of all, it's had a really big run. And it's been, these guys have been leading stocks 2017. We're going to talk about December markups, but this is definitely one that could be a December markup. So Facebook, fantastic. We've got an entry signal right now. Actually, I almost entered it today, but wanted to hold off just to make sure the market's okay. And then you could also play a high break. And you're going to see the same thing with Netflix. These are all near all-time highs. I almost entered Netflix today, but was a little concerned because it didn't close that strong. And it closed right at the 9 instead of really clearing it. But again, you're going to see the same thing. I'm just going to whiz through these because it's essentially the same pattern. Amazon, same thing. A little stronger in that it's at highs, and I'd probably go for a break of 1140. And then Google, same thing here, breaking over the 9. So that's the FANG stocks. Now let's get to some of the semiconductors. NVIDIA, you're seeing a very similar pattern here. OLED has actually been one of the better semiconductors here. Actually looked like it might be a short candidate just a day ago and just came storming out of the gate today and was up another almost 4% here. Definitely one that could be a year-end markup when you consider, starting in January it was at 55 and it's up at 180. Now you might be asking yourself, well, if it's at 180, can it go any higher? Because it was all the way down at 55. The answer is yes. Stocks that are showing momentum tend to stay in momentum, especially going into the end of the year. And actually, let's talk about the year-end markups now. So what happens is these hedge fund managers, they want to show their clients that they're in the stocks that we're moving. So let's say you're a hedge fund manager and you haven't been trading OLED. You missed the move. And a lot of people have missed the move. It doesn't trade on a lot of volume here. Their clients are going to say to them, this thing has run from 55 to 180. Why haven't you been in it? So they want to get ahead of that and actually be in it when their clients ask them that. So that's what we mean by year-end markups. The stocks that have been leading the market going into the end of the year often get a pop towards the end of the year. So OLED is a really good candidate for that. A lot of these big techs are really good candidates for that. So we're going to watch for key breakouts in something like OLED and potentially get in it. Now, Most of the good semiconductors are putting in patterns like OLED and NVIDIA, basically uptrends. They've had some pullbacks, but they always remount those levels. The one that has been lagging here is AAOI. So if we look at AAOI, it was leading. It was actually one of the best for a while, but after earnings in August, there was some concern, and we had two of these big gap downs in a row. But this last earnings, we got a big pop. And this could be the signal that reverses the stock. So definitely what I'm going to watch. There's a specific setup I trade related to gap down reversals. We won't get deep into that, but I will say the easy trade would be if it breaks 50, you can get in. And if it were to clear these moving averages, that would be another good setup going into the end of the year. All right, so we've covered big tech, we've covered semiconductors. I'm not going to go over all of the China stocks because they're essentially the same patterns. Let's go over Baba, Baidu, and the big one, YY. So Baba is one of my favorites, and this is another one I almost entered today. You see that same pattern, remounting the moving average. Has made a huge run from 86 to 185, so about 100 points here. And this thing, if this thing breaks the highs here, it could fly. Baidu, similar pattern here until the big gap down. And I think this was earnings. But if this thing comes back here, sometimes there's overreactions to earnings. If this thing breaks the 50-day moving average, we could get back into Baidu. And then finally, the big mover yesterday was YY. It was up about 30% on earnings. Difficult to get into after a big breakout like this, but we're going to watch for some consolidation, and if it does break another range, we'll definitely look to get in. So those are China stocks. Let's really quickly talk about financials here. I probably actually won't trade it, even though I am watching it. But if financials break highs, you'd have the same kind of setup. I think there's more money to be made in some of the tech names, so I'd rather use my capital towards that than financials. But if you are looking to diversify, it should put in a nice setup here. All right, we talked about energy already. Let's skip over to solar. So I got some questions in here about how I figure out these industries. One, I look at the industry ETFs. The other thing I do is within TC2000, and a lot of different platforms will have something like this. If you want a free platform, you can go into FinViz and go into their, I think they call it groupings, and you can get industry sorts in there. But I basically take the 30-day, get these industry groupings. They have 146 of them, and I sort them by the top 30-day performers. And you can see here, number one is solar. Now, just because it's number one doesn't mean I'm going to trade it. I want to see how the pattern is. Is there volume coming into the sector? Solar has been one of the leading areas, and two of my favorites. Within TC2000, then you can go in here and look at all the different stocks within solars. Now, two of my favorites are FSLR, and you can see here FSLR has been on fire since April, has run here from 26 to 60, so over 100% gains. Had a huge earnings breakout and now is consolidating at the 9. My setup here for FSLR is basically if it breaks 62.50. Breaks 62.50, that's where we could get the next really big run, and I would look to enter here going into the end of the year. And then the other one is SEDG. Now SEDG has been even though FSLR is the one everyone thinks about, SEDG is a newer stock. It's a lower float, so it tends to move faster. It's an IPO. Going back here to I think 2015 or 14. Yeah, December 2015. So a newer stock, lower float. You can see how this thing can move. And in that same period, it's moved from 14 to 37. We're seeing a very similar pattern here. If it breaks the highs, I'll look to get in. And maybe I could even play a pullback here. So that's how we're looking to play FSLR. Housing and construction is basically just like financials. Let's talk about retail here because this is a different pattern, and we'll look at UA and Macy's. So retail has been hit hard. Let's pull up the retail ETF. You can see here XRT really beaten down here. So we can go back to late 2016, basically a year ago. This ETF was at 48, and it just hit a low of 38. So that's about a 30% move to the downside in 2017. But now we're starting to see it wake up a little bit. It's tried to break its 200-day moving average once, and we're about to make another attempt here. If it can break this moving average, retail could really run, and we're starting to see some money come in here. So all this green volume is a good sign. So we want to make a basket of some retail stocks we could potentially trade. Now, what I've been doing is, rather than focusing on the ones that have been strong, I want ones that have been beaten down and have a chance to bounce. So obviously UA is one of these huge gap down. But look at this, we got a reversal candle in here. Now it's trying to break the 9. If it can break the 9, we might have an entry here. And definitely if it gets up over the 50-day moving average, we could enter UA. And then finally, Macy's here. And we're seeing a very similar pattern here. If it crosses the 50-day moving average, we could really run here. So these are your 33 stocks. I went through most of them here. And a lot of these setup triggers are going to be the same. So this is the list that we're looking to trade going into the end of the year. If the market starts to run, these guys are going to be the leaders, and we should be able to beat the market. Okay, any quick questions related to what we just talked about? We can answer here before we get to our next topic, which is FANG and year-end markups. I actually mixed that into what we were already talking about, so I don't really need to get into that too deep here. Yeah, actually, Coors is a good retail stock as well. That's on my list. Are your daily moving averages simple or exponential? So the 50 and the 200-day moving averages are simple. The 9 is exponential, and if you like it to keep them all simple, you can put the 5 simple instead of the 9 EMA. They basically are going to be around the same level. Okay, all right. Well, I'm getting a lot of questions related to other things. We'll hit those at the end, which we're almost there now. So here's the slide of the FANG stocks. We already talked about them, so I don't need to go into it again. But the concept of year-end markups, which we just talked about, is basically these leaders are probably going to get bought up going into the end of the year. So watch for these setups. When you get the entry triggers, trade them aggressively going into the end of the year as long as you get the signals. Okay, now the other thing I'm going to be watching, so there's these 33 stocks. The other thing I'm watching going into the end of the year is stocks that this quarter, this earnings season we're kind of at the end of right now, basically the third quarter earnings. These stocks have reported earnings. The stocks that have shown strength could also make runs going into the end of the year. So if you look here, this is one of my watch lists here, which is the earnings breakout list. So this is third quarter 2017 earnings. It's a list of 86 stocks. It's really, in my notebook, I have about 30 more. So it's really a list of over 100 stocks. Now, when you look at these stocks, you're going to see the same pattern over and over again. You're going to see a breakout breaking a range with a lot of volume. Breakout over a range with a lot of volume. This is what I'm looking at for earnings breakouts. These are stocks that had good earnings reactions. They probably had good earnings news, and the market liked what they were hearing, so the stock breaks out. Now, there are 7 or 8 different patterns I trade related to these earnings setups. I don't have time to go over it today, but when you see my trades in the swing service, you'll recognize these patterns because I'm trading these patterns over and over again. So the most recent one, and you can see a lot of similarity in all of these stocks in how they're breaking out. Now, Buffalo Wild Wings is the latest one we took, which was a huge win. The idea here was we had the breakout. Look at this breakout on heavy volume. We had a pullback, which is natural. These things, someone bought here down at 96. They might be wanting to take profits here at 116, 120. They're staying on a 20% gain. So we're looking for a good entry point after the pullback. The idea here is at some point, the profit taking is going to be over, and then the stock is going to run. Our trigger was right here. When it showed strength at the 9, that was a signal to us that the pullback was over, and we entered here at 115. Now, initially, my plan was to take some partial profits at about 127. I would have been happy with a 13-point win and then seen if it broke out. Now, there was acquisition news, and this was a fantastic, huge win for us. Basically, the entry was 115, and this thing popped up to 150 the next day. And I actually got out of it after hours on the day that the news came out, and we got out at 148. So huge win here. Now, this isn't always going to happen, but this is a really strong setup here. The breakout pullback off earnings. So keep a lookout for those. You can see here, you can jot some of these stocks down. Real simple to do. Just scan for 5% breakouts during earnings season, and you'll get a lot of good candidates for earnings breakouts. YY, which we just talked about, broke out on earnings yesterday. All right, guys. So that's post-earnings breakouts that you want to be paying attention to going into the end of the year. Now let's talk about December and end of the year seasonality. Why are we so focused on this end of the year seasonality? Number one, the statistics show 1950 to 2012, and I'm sure if we updated it, I know last year was similar. Last year we had a nice run up going into the end of the year as well. You can see the chart here, which is last year's SPY chart. It's historically the second best month of the year. March tends to be a really strong month for some reason. And then after that, it's December. On average, the market is up almost 2%, which is big when you average out everything. You know, winning years, losing years, being up 2% is really strong. So we have that in our favor. Essentially, we're aligning these seasonal probabilities in our favor. Number two, we've already talked about end of year markups. December tends to be a good month because these hedge funds are trying to get the market moving so they look good to their clients. So that's number two. So we have these two factors in our favor to trade to the long side. So I'm very biased towards the long side when I'm trading in December. So again, we're going to look for the best performing stocks during the year for markup runs. I gave you 33 of them. Keep those in a watch list. There's some more you could be watching. You know, do your own research on what really moved this year. Key in on those stocks. And one last thing, while December tends to have that end of the year markup, it's not like you buy on the 1st and get out on the 30th. Usually there's a little dip actually at the beginning of December, and then the actual big run usually starts to come in the first or after the first or second week. So generally what I do is I kind of hold off that first week. We're coming off Thanksgiving. Traders aren't getting really aggressive, but you know, around December 10th, December 15th, even sometimes up to December 20th, that's when you start to see that big run going into Christmas, going into New Year's. So pay attention to that. Don't just buy, you know, because we've talked about December's seasonality, you think it's going to be up 2%. Don't just buy in on December 1st. Last December was a great example of this. You can see here on this chart, we had a nice move in November. This was post-election, that post-election run. Around Thanksgiving, we had a little bit of a sell-off and some consolidation early in December. So there was a little pullback in December and then consolidation. And it wasn't until about the first week was over that we started to get the run in here. So watch for that. Watch for that initial dip. If I was to guess, I would say late next week, we get the Thanksgiving holiday, and maybe a few days after Thanksgiving, we get a little bit of that pullback, and then at some point we'll get the big push. And you want to ride that push with these, you know, best performing stocks. So pay attention to that. Okay, guys, so that is what I wanted to cover today. Now we're going to hit your questions. And remember, guys, we talked about it a little bit. We have the swing trading service, which is what I run in Bulls on Wall Street. I also do, if you're a bootcamp member, I do 3 guest sessions in there going over swing trading, basically going over earnings breakouts, going over sector analysis, and I also go over shorting momentum stocks that have made these huge runs. When's the right time to short them? And then within the swing trading service, basically you get a report every trading day, comes out before the market opens, where I go over what I'm looking to trade, any positions we've taken. Usually there's a 5 or 10 minute video, my focus list for that day, and then during the day, if I make a trade, you get a trading alert. So we have a really good, amazing deal here. So Already this thing is discounted. There's also a free weekly swing report. So if you're not ready for the swing service, just put your email in here, and I put out most weeks a weekly swing report to get you started for the week, and that's free. Kind of sets up the trading week, and I usually include a few stocks that you could potentially trade. So you can sign up for that. This pop-up comes up when you go to the Swing Alerts page. Now, the monthly plan is $99. If you sign up for the yearly plan, which would be $1,200, if you pay it up front, it's 50% off at $600. And I was really surprised about this. If they asked me, I would probably say no. But on top of that 50% off, you get 30% off for this Black Friday deal. You put in this code here. And so on top of the 50% off you're getting 30% off. So I think then for a full year, it's going to be somewhere in the, I guess 400 and something dollars if I'm calculating that right. So it's an amazing deal, would regularly be $1,200. So check that out. All right, now let's get to your questions. Big question and answer session. I'm going to try to answer as many questions as I can. And by the way, guys, let me know also if you understood what we were talking about today, if everything was clear, and anything you need me to go over again. All right, let's start with a few of the older questions here that I didn't get to. Why don't you look at DIA? Chris, the reason I don't pay attention to the Dow, one, it's made up of the slowest moving stocks in the market, stocks that I don't trade. You know, I have a few of them in longer term accounts, but in terms of swing trading, where we want to trade quick momentum, those are not the type of stocks I'm looking at, and they're not a good representation of the overall market. It's only a few stocks, 30 stocks. So I pretty much ignore the Dow. It doesn't really help me in my trading. Will the slides be posted online? You know, I don't think we can post them online. What I'll do is, the most important thing for you right now is to get this list of 33 stocks. You can look at it here. Hopefully you jotted them down. If you still need them, email me, singhjd1@aol.com. Let me write it down here. SINGHJD1. And I know it's an AOL account. I have Gmail accounts, but I have a hard time cutting out my old AOL account. But singhjd1@aol.com, I'll send you the list here. So, all right. Not INTC. You know, INTC is fine. It's a semiconductor stock. It just doesn't tend to move like some of these other faster stocks. That's why I don't use INTC. But yeah, INTC would be great as well. How do you come up with the sectors? David, I think I went over, you saw that here. I do this industry sector analysis within TC2000, basically sorting them over the top performing 5-day, 30-day, and quarterly industries. All right, we talked about Coors. Are these triggers only on the daily chart? So I think what you're asking, Nicholas, is do I also pay attention to intraday? For these trend type trades, I don't care about the intraday. So basically, I just want to see the dailies. Now, there are specific swing setups where I might look at the intraday. I also day trade a lot, so I am looking at intraday action. But specifically for these type of swing trades, actually, if you're paying close attention to intraday movements, it's probably going to throw you off because you're looking at the wrong time frames, and you're going to have some over analysis. So just pay attention to the dailies. How do you scan for momentum stocks? Okay, I get this question a lot. I do not use a scan to spit out a list of stocks. I think the traders who do that, which there's a lot of them, are making a big mistake because it doesn't give you a good understanding of what's going on in the overall market. And you really need to know that. You have to have an understanding of where the money is moving. And you don't really get that unless you do a good industry and sector analysis. So what I do is I start with the best performing sectors, like you guys saw that list there, and then I look for the best stocks within that sector. Might take a little bit of more work, but not a lot. I basically spend 45 minutes on the weekend picking these stocks. So for example, I see that I like solar. Solar's flying. I go into the solar sector, and then I start analyzing the 16 stocks within that sector. And I go through each of these sectors that I like, picking those stocks. So when we went to residential construction, you saw on my list here, there were 4 stocks: LGIH, Toll, DHI, and Lennar. I basically went into here and analyzed these stocks. So I don't use a scan to spit out the momentum stocks. Now I do some other things. I do scan for breakouts and breakdowns every day and overbought and oversold stocks. But in terms of a momentum scan spitting out stocks, I don't do that. Okay, can you point out the reversal candle in UA? Sure. So Jeff, the reversals candle is this bullish engulfing formation right here. Now, the bullish engulfing pattern is basically when a stock is beaten down and oversold, and then the new candle completely envelops the previous day's candle. Now, this pattern is meaningless within a range. It's only important when a stock is very oversold, and we saw that here in UA. That was essentially a good trigger here. And I think this, now sometimes they will retest the bottom, but this is often a good signal. If I were to bet here, I would bet that UA is going to make a little run here. Okay. Raj is skeptical about AAOI. Sure. I mean, we're looking for entry signals, and I'm not making. We're not making a prediction right now. And you can be skeptical about a lot of different setups, but these beaten down stocks that start to reverse, that have volume coming in, will often make good runs. I will not enter it now, but if it clears the specific ranges we're looking for, that definitely would be a fantastic entry signal. All right, Brian, and by the way, Brian's nickname for me is P Money. You buy breaks of highs a lot. Aren't pullbacks better reward to risk? Yeah, so that's interesting. So there's two ways, a lot of these setups we talked about. Let me just pull up BABA as an example. There's essentially two ways to play these. You can either play the pullback or the high break. Either of them are good setups. Now with the pullback, you're getting better value. So you're getting a little bit of a better risk reward. So you have to risk less, and your target can be higher. You could potentially make more on these. But oftentimes these bounces will fail. And I feel more comfortable sometimes waiting for that high break, especially if that high break has been tested already. And BABA has kind of tested some of these highs. So it's really subjective. Either one of those strategies is valid, and I go back and forth. Sometimes, trading is an art and a science. So, we have this science, we have these tested strategies, we've done the data analysis on them, but some of it for me is subjective as well. And sometimes it's a matter of intuition and which strategy you want to use. Do you consider fundamentals in swing trading? Raj, I do not at all, not for swing trading. I learned a long time ago, and I have, in the mid-2000s when I first started trading, I studied fundamentals to death. I learned how to read earnings reports. I wasted a lot of time doing that. And pretty soon you will realize that fundamentals don't move stocks. There are a lot of crap stocks that actually lead the market. So some of those stocks that I showed you don't have the best fundamentals, but they're the ones that are moving. Now, where I do look at fundamentals is for my longer term stuff. So I'm talking specifically about swing trading where you're holding anywhere from 2 days to a couple of weeks, maybe even a month or two. So we're riding quick trends. So let's say 2 days to 2 months. For that, you don't need fundamentals. Now, anything longer than that, say you have a 6-month hold or a year hold or even longer term, anything that goes in my longer term accounts, I am definitely going deeper into the stocks. But specifically for what we're doing now, fundamentals don't matter. Okay, how many positions do you hold at any given time? That really relates to the market. So for example, the last couple of weeks, I haven't gone over 2 or 3 positions at one time in this specific account. I have many different accounts, and if you counted all of them, I have probably it could be up to 20 or 30 positions. But specific to the basic swing account you're trading, that I'm trading right now, 2 to 3 positions. Now, there have been periods during the year where I was up to about 8 or 9 positions in this account. So it depends, and that's part of being a good swing trader, is knowing when to pull back and take it easy and knowing when to step on it. And that's what we're trying to gauge going into the end of the year. Where is the right time for us to really push it and get aggressive? Okay, what about exits? Couple of things with exits. One, look at the volatility of the stock. In the past, how far does the stock tend to go when it breaks? So if BABA tends to go about 10 points or tends to move about 15%, that's going to be my expectation for this move. Also pay attention to your own risk reward. You want to be getting, for these 2 to 1, 3 to 1, 4 to 1. So pay attention to that. And also take a look how overbought or oversold the stock is. Those are the three things. And then if there are any resistance levels, which a lot of these stocks don't because they're near all-time highs. But those are the four things that help guide where I'm going to exit in a trade. Okay. I know remounts are working well right now. What other setups do you think will be performing the best before the end of the year? This is basically, so think about these setups that we're trading. I trade between 30 and 40 different setups specifically for swing. And then, there are a ton of other setups for my day trading, for my position trading, and some aggressive swing styles. But for this trend type of swing trading, there are about 30 to 40 different setups. Now, you have to know when to use them. So it's like the example I like to use a lot is a carpenter. Hammer is probably the best tool, but it's useless if you need a screwdriver. It's the same thing here. We need to know what setups are the most useful for the market we're in right now. And there are basically two setups that I'm looking to play well, actually, we could say 4 or 5 different setups, but they're all going to be related to these trending continuation stocks that are either pulling out or breaking over highs, which we've pretty much focused on today, the remounts and the high breaks. And then also breakout pullbacks from breaking out stocks, so that could be a third setup. And then a fourth setup, which AOI alluded to, is the gap down that is reversing. So those are the 4 or 5 different setups I'm really keyed into going into the end of the year. Now that could change. If all of a sudden we get into indications that the market is weakening and it's going to break down from highs, all of a sudden I'm going to ditch these setups and now I'm going to start thinking about topping patterns, failed breakouts, and a few other these types of patterns. But those aren't on my mind right now. But as traders, we need to be adaptable. And if I need to adapt and switch strategies, I'll go to that. Okay, how do you review your past webinars? I've done a ton of them. I'll create a page where you can get to all the different past webinars I've done. That's actually on my list of things to do. Okay, I have watched your Bulls webinar several times. The webinars have kicked ass. All right, thank you, Ashley. Campbell, how do you size your swing positions for these swing trades? Say 100K, 10K, 10 best stocks. I don't consider position size unless I'm just worried about how many positions I can take. I'm focused on my risk. So, that you should always do this before entering a trade. And too many of you focus on the position side. I don't care if it's 10,000. If let's say you're using a $100,000 account. I don't care if it's a $10,000 position or a $50,000 position or a $100,000 position. Remember, when you trade let's say you buy Google at 100,000, you buy $100,000 worth of Google. Are you really risking $100,000? Probably not. For you to lose $100,000, that means Google has to go from where it's at around 1,000 right now to 0. That's not going to happen. What I'm thinking is the risk. Where am I going to get out of this trade? So if I have 100 shares of Google and I'm thinking about where I'm going to get out, and let's say I'm going to risk 100 shares of Google, I'm willing to risk 10 points, that means I could potentially lose $1,000 on that trade. That means a $1,000 loss is going to be 1% of that $100,000 account. So that's what I'm thinking about. I'm risking 1% on this trade. So that's the way I'm looking at it. And most of my trades are going to be between 0.5 and 1.5% risk. So on a $100,000 account, I'm going to risk between $500 and $1,500 because you have to be able to get through drawdowns, and you can't take big losses. So we're always thinking that defense first. Now, a lot of you are not trading $100,000 accounts. Some of you are trading bigger accounts. Some of you are trading smaller. Those of you who are trading smaller, I know there's a temptation to want to run this thing up. I started with a small account, years ago, about 12 to 13 years ago. I was trading a $5,000 account, and I grinded it up. And basically, when I was trading a $10,000 account, I was never risking more than $200 or $300 per trade. And you're grinding it up over time. And as that account grows, you can start to risk more per trade. And remember, that $300 is not the position size, it's how much you're going to lose on that trade. All right, Jim. IBM has pulled back into the gap off earnings. Do you like it? First of all, I barely ever trade IBM just because I have better options in terms of volatility. This is a volatility measure. Most of the stocks I trade are 40 and above, and you can see IBM is only at 17. That being said, it's a really nice setup here. Breakout, pullback, showing some strength here. I would wait for it to get over the 9. A lot of stocks did this today. They bounced right to the 9 and pulled back. Actually, the LABU setup that we traded, that's why I got out today, because it looked like it was going to fail at the 9. If it crosses the 9, I'll get back in. But IBM, if you are looking to trade this, I would wait for it to break, say 140. The 9 is at 149.65. I would say wait for it to break 150, and then you have a good setup. But overall, the pattern is really nice. What do you think about GE? I know GE gapped down big. Again, it's a stock I do not trade. But you know, if you're trading options, you can get the leverage. Yeah, I don't like it right here. I want to see more proof that it's bouncing here. I'd probably want to see it get up over the 9. Okay. In which situations do you take partial profits? I tend to take partial profits if we're hitting a resistance level that I think the stock could break through. And there's a lot of factors that lead me to believe that, you know, the price action, the volume, doesn't have any short interest, is it a low float stock? There's a bunch of different factors that go into it in terms of when I'm going to take partials and when I'm going to take the full position. Okay, do you use Fibonacci's for targets? No, I do not. I've tested Fibonacci's and I find them worthless. A lot of it is retrofitting what has already happened. And I studied them quite a bit back in the mid-2000s, and I didn't find it helpful at all. Are alerts emailed? You can get a text or email or both. All right, guys, wow. There are a ton of questions here. I'm not going to be able to get through all these. Let's pour through some more here. Any questions I did not get to, I am going to create a video, hopefully before the Thanksgiving holiday here, maybe in the next couple of days, going over them. But it'll be a specific video just answering questions here. Where do you sign up for swing alerts? Go on the Bulls on Wall Street page. Let's see here. And go to Swing Alert Service, and you can go down here, get the instant access, and you put in the code, which is Black Friday. There should be somewhere to put it in there. If you're having issues with that, you know, I don't handle this stuff. My focus is trading. But if you have any issues, email swing@bullson.com. Okay, how many trades are you typically in one time? I think I answered that one. What is the minimum account size in order to overcome trading fees? There is no minimum account size. I would say you probably want to start with 5,000. That's where I started. And then once you get up to 25,000, you can really start trading the way you want to trade. Now, if you are trading with a small account, like say $5,000, that was a really good observation, Nicholas, that fees can crush you. And that's something that I had to overcome early on. You do not want to overtrade. And it's actually a good thing because you don't need to be in and out of a lot of stocks. You want to be able to ride trends. So pick stocks that you think can trend and only take 2 or 3 at one time, rather than getting a big basket of stocks where you're only taking 5 shares of each. So that was my strategy. I would never get into more than 2 or 3, and I would try to ride trends. And then as it grows, you can get more aggressive with the sizes. Pick a broker that has low fees. I would not use Ameritrade or E-Trade or anything like that. IB is a good one. So that is an issue you're going to have to deal with. Okay, got another question about fundamentals. I already answered that. No, I do not consider fundamentals for swing trading. I do for position trading or longer term trades. Do you have exact entries like highs over a certain candle, or do you get in around this area? Yeah, I don't usually have exact triggers other than I wanted to clear the 9, I wanted to clear a breakout high. If you really get, and I used to be like this, I used to look for exact triggers. Over time, you find out not only are you not getting an edge with that, it has very little impact. And actually, once you start micromanaging and overanalyzing where these triggers are, it keeps you out of a lot of good trades that you wish you had taken if you were more general about your entries. Okay, are you only focused on higher price stocks? Any price stock. Price does not matter. Now, it just happens to be a lot of these big techs are higher priced. And that's also a common misconception a lot of small account holders have, is that, I only have $5,000. To trade Netflix, I can only get, my mind's blanking on the math now, but like let's say you're trading a $200 stock and you have a $5,000 account, you can only trade 25 shares. And if you trade a $5 stock, you can load up on 1,000 shares. That's the wrong attitude to have. You have to ask yourself, which stock is going to make the biggest percentage gain? Now, if you look at Facebook, if you entered Facebook here in July, it's basically made a 25% gain since then. So even with the 25 shares, you would be sitting on a very big gain for your account size. So think in terms of percentage gain and not the price of the stock. Don't be afraid to trade these higher price stocks, as long as it is proven that it can make good percentage gains. Okay, Ling, the code for Black Friday is Black Friday, so that's pretty easy. Percentage return this year, I'm sitting at around 27 or 28%, and last year was over 40%. Paul, do you, okay, my questions are freezing up here. For some reason, this is frozen up and I can't see the entire questions. I'm going to try to answer some of these the best I can. Good resources to learn more about UVXY. Brian, good question. You do want to learn as much as you can about UVXY and SVXY. Don't read up on it because there's a lot of misinformation. Test it, and it's very simple. Look for where UVXY spikes and where it makes its big downturns, and then you can trade SVXY. It's a very easy study. Just go back over the last 2 years, compare what UVXY does to SPY, spend a few hours on it, and you'll be good to go. I guarantee you'll figure it out. All right. All right, so really quick, guys, what I'm going to do is I'm going to get out of the questions and get back in. It looks like for some reason it's frozen up and I can't toggle through these. So 1 second here. All right, there we go. All right, I'm new to trading. Do you offer courses on swing trading besides the bootcamp? The best thing to do is sign up for the swing report. In the beginning, there was going to be a learning curve, but once you listen to what I've found and what most people have told me is in the beginning, especially if you're new to trading, it's a lot to take in. But after about a month or two of listening to me every day, because you're going to hear me every morning, you hear my market analysis every morning, you hear my sector analysis every morning, you hear what I'm talking about in terms of these setups. Like, you may not know what a remount is, but just me going over all these stocks, you probably have a general idea now. And if I'm talking about it every day, it's like through osmosis, you start to get it. And what most people have found is after a month or two, they really start to get it. So that would be your best bet. And then you can ask me questions anytime. Okay, I was watching LABU, but I feared it was just running into the 9 EMA. Why did you buy under the 9 EMA? The reason I bought under the 9 EMA is because there was room here. So I entered yesterday at about 64, and I had room all the way to 71. So that was a good 7 points, and I was only risking 3 points. So I was going to get my 2 to 1 by the time it got to the 9. So I had enough room over here. Now, if the 9 was down here at 66, I would have never taken that trade. But since I could get about 2.5 to 1 on it, it was a slam dunk to take. And then you can also think of it as one big trade broken down in two. So I'm in the trade here, I get out here, and now if it clears the 9, I will get back in and see if it can make a run to 80. So I'm definitely going to be watching this tomorrow, Monday, Tuesday, to see if it can remount that 9. Okay, if price goes above the 9, is it good for swing trading? Yeah. So when price has been above the 9 and the stock is trending, that's key, Shyam. If the stock has been trending and then it pulls up over the 9, that's a really strong signal. Shows, okay, the 90 EMA is a little different than on stock charts. I can't speak to stock charts. I haven't used stock charts in years. So I'm probably not the best person to ask. What do you think of LRCX? LRCX looks great. Another good semiconductor stocks. A lot of semiconductors on fire. My one comment on LRCX is the other ones that I showed you, especially OLED and NVIDIA, have had bigger percentage gains in the same period of time. So even though you can definitely make money on this and it's a good stock, there's really no reason for me to trade this over NVIDIA or OLED. If you have educational videos for new members, go into the Bulls on Wall Street blog. There are a ton of videos in there that I've done, put up blog posts all the time. Also, you can go to my YouTube page, which I think is Paul J. Singh on YouTube, and there's a ton of videos in there. Basically, the videos that I put out on Bulls on Wall Street, I record them in YouTube, so you can check them out there as well. Could you use stochastics, overbought and oversold? If you're a new trader, Alberto, it can be helpful to have the stochastics in. Once you get experienced, you don't need it. So I can look at the chart and very easily see whether a stock is extended or not. But definitely, if you're a new trader, go ahead and put stochastics on. I try to use as few indicators as possible, but stochastics is one that I do find valuable, so you can definitely put that on. Okay, is an inside day or inside week candle significant in your stock picking? Not really. So it's inside day is essentially a little bit of a pullback from a move. So just think of it as a pullback. I don't really categorize it as an inside day. How do you set stops in swing trading, especially when longing the dip? So basically what I'm going to do is, you're right, I'm going to look at the support level and I'm going to place the stop before that. One key element is you want to place a stop probably lower than where everyone else is, so give yourself a little more room than most people would to avoid getting stopped out where everyone else is getting stopped out. What type of setups do you like now in day trading? There are a lot of good setups in day trading, and we're focused on swing today. And Kunal, is the one who runs the day trading here, but I'll just speak to it real quick. What I've been trading mostly is momentum breakouts. So stocks that are gapping up, and there are both good long and short setups related to those. But if you're trading those and you know what to trade, you'll have been successful in the past month or two. What do you think about Roku? Right now I love Roku, so we'll put up ROKU. Now this is more of an aggressive style trading that I do not trade in the part-time trading account because that's geared towards, or in the swing service account because that's geared towards part-time traders. And you do need to be managing this one a little bit more closely. But I definitely like it. Basically, with any IPO, once the IPO breaks the IPO high, that's where I start looking for the big run, and I have been aggressively trading this, both for swings and day trades. The next spot is if it breaks this range here, somewhere between 44 and 48. Definitely if it breaks round number 50, that could set up the next run. So watching Roku very closely. Can you use options in FANG stocks? Definitely, you can use options. But a lot of you guys who trade options don't really know what you're doing. So if you're trading options, make sure you've mastered the specific option strategy you're using, and you're using an underlying swing strategy, and then moving to the options. Okay, Jasmine, how to swing trade with a small account. I talked about all that. I hit that one already with the high price stocks. How do I know my risk ratio? Simply figure out what your loss is going to be and look at where your target is. How much are you going to win on the trade? If I'm risking $200 on a trade, and if it hits my target, I'm going to make $400. That means I'm risking 2 to 1. 400 divided by 200 is 2. So 2 to 1. So really simple way to manage your risk. Do I ever hold over earnings? Very rarely. So basically, when you hold through earnings, you're essentially gambling. So I get out before earnings. Obviously, with my long-term trades, you have to hold through earnings. But for these type of swing strategies, I do not hold through earnings. Okay, I think I answered your BABA question, Michael. Can you say what the code is? Black Friday. Entry on UWT, it's essentially the same entry as USO, which is the underlying ETF. Basically, if it breaks the high. So if we look at UWT, which is oil, if oil breaks the high here around 22.50, I'll look to get in. Also remember, guys, oil inventories are every Wednesday. If you're in oil, you better be paying attention to oil inventories an hour before the open on Wednesdays. All right, guys, there are a ton of questions here. I'm going to end the webinar here. This was a fantastic session. A lot of really passionate traders. I can see that in the amount of questions I got, and really good questions. What I'm going to do is, if your question did not get answered, and there were none where I wouldn't answer. Sometimes I get some crazy questions. There were none of those here. So I'm going to answer every question in a video. I'll try to get to it this weekend, and early next week I'll have that out. Pay attention to the Bulls on Wall Street blog. You can sign up for the updates. They'll go to your email, and I will send up a follow-up Q&A. So pay attention to that. Remember, if you're not a member of the Swing Service, there's a fantastic Black Friday deal. We barely ever do this. And if I had my way, I wouldn't be doing this extra 30% because I already think 50% is a huge deal. So this is your chance. And if you do sign up, let me know. I'll go over it with you a little bit. You can shoot me an email. Again, that's singhjd1@aol.com. If you don't sign up for the service, a ton of free, valuable content in the blog and on the YouTube page, also on my Instagram, Twitter. So there's a lot of free resources as well. So keep following. I'm going to do one more webinar before the end of the year, and we'll go over statistics. And I'll go over a lot of my trades during the year. So definitely do not miss that webinar. All right, guys, this has been awesome. It's been a blast. I'll see you guys next time.